Hi everyone, I'm joined here with Mary Ann from Rubiix, and my name is Stuart from Rubiix as well. And today we're going to be talking about structuring your business or entities up. And what do I mean by that? So I guess when you're thinking about going into business, the first thing that we talk about is getting the structures right. So what is a structure?
So essentially there's 4 types of structures. You have a choice of a sole trader, partnership, a trust and a company.
Cool, okay. So what is a sole trader? What does that do?
So a sole trader is the simplest structure. There is no legal separation between the business and the individual, no limits to the liability, and the individual is taxed at the marginal tax rate.
We often see people operating out of a sole trader when they're initially starting up business because it is so simple. So that's often the first stage. You start running the business out of your personal name. So the next one we're talking about is a partnership. So what's that one?
So partnership is when 2 or more individuals or entities come together to run a business. A partnership is not a legal separate entity. The partners are responsible for the debts and obligations of the business, and each partner is taxed at their relevant structure.
So again, that's often a simple structure as well. Again, sometimes when you're initially starting up the business, when there's not a huge amount of complexity around a business, we don't look after a huge amount of business partnerships in our business, or we don't look after a huge amount of sole traders as well, because we do move them across to the more complex areas. Speaking of more complex, what is a trust?
A trust? Well, essentially a trust is like a vehicle where a responsible party, which is called a trustee, holds the assets for the benefits of the beneficiaries. And this actually requires a legal document, which is called a trust deed. In terms of the tax, it's each individual or each beneficiary is taxed at the marginal tax rate, or essentially if the beneficiary is an entity, it depends on the structure on how they're taxed.
So you can see that is a lot more complex than the sole trader and the partnership. There's also unit trusts as well, so that's another consideration. So trusts are one of the more common entities that we look after, that we advise about, first of all in business as well as if it's an investment trust as well. But there's one more, and that is a company. So what is that?
So a company is now a separate legal entity that must be registered with ASIC. The liability is actually limited, and legal responsibility is imposed on the company and also the directors. In terms of the tax, they pay at a flat rate, but that depends on whether the company is a base rate entity. If it is a base rate entity, it's at 25%. If not, it's at 30%. And I guess lastly, with companies, the profits are paid out to the shareholders by way of a dividend.
So again, that's a lot more complex than a sole trader as well as a partnership. There's lots of ins and outs and a lot of complexities to understand, and that's where the team at Rubiix can help you out. So thank you very much, Mary Ann, for clearing that stuff. Hi, if you liked that video and want to hear more, please like, share or subscribe to our YouTube channel. That would be awesome.